a new leader who is very dovish when it comes to monetary policy. Yes. And this is very bullish for your bags. Yet people out there are still bearish. France is continuing to melt down. And this is very bullish for your bags. Yet people are still bearish. In fact, the bearishness is so bad that when I was in a crypto spaces today, I heard it from very smart people. It's like they don't even know what actually causes crypto to go up. And these aren't the dummies. No, these are the smart people. They still don't know. Well, what's going on here? How is this possible? And is it possible that it's all over today like so many people think? Because if the 4-year cycle is to be believed, well, then today should be the Bitcoin top. I've got evidence to show that. So if we post a new top tomorrow, does that break the 4-year cycle and put this argument to bed permanently? All these questions I am going to attempt to answer today. You're watching Reinvent Ideal. I'm Cairo Copeland, and this is Shut the FUD Up. Good evening and welcome, Hexico. It's time that we have ourselves a very difficult conversation that so many of you are dreading. You ever had one of these here? Let me tell you about it. There was a time where I had one of these conversations. Way back when I ran the laundromat business, I had to have a very difficult conversation with one of my employees because, well, they had very bad breath. And so many other customers were noticing and asking me about it. Like, hey, she's got bad breath. Maybe you should talk to her about it. You think like she could brush her teeth before coming into work and everything. And, it was a very difficult conversation to have to go up to her and be like, hey, I got to tell you something important. And I didn't tell her. What I did was I just kept bringing Altoids to the laundromat every day and said, here, have one of these. They taste really good. Yes. I chickened out back then because that was one of the only employees that I could get. And man, I'd say it really sucks being an employer in America. Like if you run a business, or if you're thinking about running a business, don't. Not in America, where you employ people. Bad idea, because employing people really sucks just because, like, the selection of people out there that you have to hire really suck. It really sucks. And that's no shade on Americans or anything. Maybe it was just shade on the whole South Daytona area. Yeah, don't ever live in South Daytona either. It's one of the worst places in the world. The whole of Volusia County is crap, too, by the way. Stay out of Volusia County. Like, if you want to come move to Florida, you get yourself a nice price on a home in, like, Punta Gorda or Cape Coral. All right, Tam, my number one cheerleader, is here, so that means it's all right to get started on the real game here. And as I was saying before, guys, it's time for us to have a very difficult conversation. Yes, as you know, me being Cairo of Reinvent Ideal, I'm your bullish big brother, and I keep saying that, oh yes, this bull market really hasn't even gotten started. Matter of fact, this morning I put out a new Substack that said precisely that. But let's take a look here at this. Did y'all see this here? I also posted this the other day. What this says here is that if the 4-year cycle is to be believed, then what should happen is first we hit an all-time low that is 364 days after the all-time high, which occurred with the all-time high that happened in, when was it? It happened in November of 2021, and then came the all-time low in November of 2022 with FTX doing what it did. All right? So that part was true. In previous cycles, what happened was the new all-time high happens 1,064 days after the all-time low, which is today. Today, October the 6th, is 1,064 days from the all-time low that we experienced in November of 2022. So figuratively, this means that if we hit a new all-time high today, that means it should be all over, at least for Bitcoin. So we should all just sell our bags, pack up, and go home, right? I mean, it's the 4-year cycle. We can't argue with it because this has always been the case, right? Now, the interesting thing here about this is that all of the 4-year fundamentalists that I've been arguing with, none of them ever brought this up here. They never brought up the exact days, so this is something that I think was just recently discovered. I mean, I can't even see when this was posted or anything. We had a great discussion with T-Bird. He posted it on his channel. If you want to go see it, he's got it over there. Got nothing but respect for T-Bird. He made a great case for what he believes, but I'm just not convinced that crypto is going to just go down or stay flat the whole time if global M2 keeps going up. I'm working on something here that is going to show everybody that at least 90% of the price appreciation is due to global M2 going up. I'm working on that. I'm going to have that hopefully in a stream later this week or maybe next week. We'll see. But all of the price appreciation that you experience, 90% of that, I say, comes just from global M2 doing what it does. Do you have any reason to believe that global M2 is going to stop growing? Do you have any reason to believe that it's going to start contracting? Because I've got several reasons to believe the opposite. And I'm going to share 2 of those reasons with you today on this program. If you're not bullish by the end of this stream, well, then I don't know how you can be bullish ever. And you may as well just sell out your bags and go away here because, yeah, you're just like so heavily infected with FUD that it's infested your mind and has twisted your thoughts and everything. And it makes me just want to say this to you.
Sometimes you just gotta shut the FUD up.
All right? If I can't convince you today, I don't think anybody can convince you ever. So it's just pointless. Why are you even investing in crypto to begin with, all right? So, here's what we want to look at first here. Let's look at the stuff that usually we pay attention to at the beginning. Look at crypto today here. Let's look at the Bitcoin chart. Let me single it out. This thing had an amazing run today here. I mean, we hit the new all-time high of $126,069. And because it is the 1,064th day from the all-time low, that, I guess, is going to be the top of this cycle, and it's all downhill from here. I mean, look at this. The chart is even already going down here, yeah. Let's pack it up. It's all over, right? I'm going to challenge that later today. Still very impressive right here. So far, because the future hasn't happened yet, so far, T-Bird is right. T-Bird is right until tomorrow if this thing posts a new all-time high. That's how I'm going to play with this here today, right? I'm going to say, yeah, the T-Bird and the 4-year fundamentalists, so far they're right, but the second that tomorrow or later this week a new high is hit and they're proven wrong, you're going to hear that first from me. Because here's the thing that I'm noticing here about this is when we look at daily closes on these charts here, we look at these daily closes. See, is it going to show this to me here? I mean, this is I don't think this is a daily chart, is it? Yeah. But anyway, what I want to say here is October the 1st, we close at what here? A new high of 118,000. October the 2nd, we close at a new high of, what is it? 119,000. October the 3rd, we also close at another high of 122,000. You notice a pattern here? October the 4th, what did we close at? A new high of 124,000. October the 5th, close again at 124,000. And then today, 125,000, possibly close higher. You notice a pattern here? We've been putting at least $1,000 a day onto the Bitcoin price. And they want to tell me that this trend is going to die right now and it's all over. Okay, sure. Now, here's what is really standing out to me here today. Take a look at the Ethereum 24-hour gain here. It is not only greater than Bitcoin's, it is twice what Bitcoin is. And if you want to say it's all over, well, riddle me this, Batman. You're telling me that this is the top for Ethereum? Because that doesn't even surpass the previous top from the previous cycle. I had a little bit of a back and forth, not so much an argument, not so much a debate, with a bunch of guys on Twitter Spaces today. Moon King was one of them, B-Roots Moon King, and Famous was another one. And what they're telling me here is like, oh yeah, there's altcoin season already happened, because look at Ethereum, look at XRP, look at Solana, and what was the other one? Sui. And I say, yeah, I am looking at them. I'm looking at them all right. And what I see here is XRP is still down 22% from its all-time high. In fact, it is still lower than its 2017 high. Solana is down 20% from its all-time high. In fact, the high that it made this time around wasn't really that much better than the high it made last cycle. And then Sui, I mean, this is a first cycle coin right here. So can we really even say where the top is on this one? Because we don't have any frame of reference for a new coin here like this. And so my argument here, or their argument was that these coins have had great runs already, and that was alt season. They also pointed to BNB, which is like the only other coin that I think has had anything close to a secular bull run in it. Like Bitcoin and BNB have been the only ones to experience true bullish market growth this cycle, because they're the only ones that surpassed their previous cycle highs. But still, even with that, BNB hasn't even done a 2x. Bitcoin hasn't even done a 2x. All right, I hope everybody can hear me right here. Internet was working fine just a moment ago, and then the gods of the internet here in Florida decide, oh, hey, let's just kick it out. Let's stop working. So hopefully you guys can hear me now. If you can't hear me now, just throw something in the chat. Let me know if you can or can't hear me, okay? Because YouTube, man, I got to say nice things about YouTube now since, like, hey, they did monetize me. And I'll tell you, I have to say something about that, guys. The monetization is got to think that I'm trying to run a bunch of crap ads on here and everything. I'm not interested in that. This isn't to make money. This is to get more exposure. All right. So where was I? What was I saying? Oh, yeah. So I keep hearing this stupid prediction over and over again. I keep seeing it posted to X like it's breaking news. I say, breaking news. Kathy Wood says Bitcoin will be $1 million by year 2030. Breaking news. Eric Trump says Bitcoin will be $1 million by 2030. Fidelity says Bitcoin will be $1 million by 2030. Well, 2030 is 5 years away. So one, I've heard this prediction at least 10 times a day for the last 4 years. Seriously, I have heard it 10 times a day for the last 4 years. I've heard it at least once a day for the last 4 years. You guys heard that way too many times? You guys tell me in the chat here. How many times have you heard people say, oh, Bitcoin's going to be $1 million by 2030? So everybody agrees, apparently, that Bitcoin is going to be $1 million in 5 years. But over the last 4 years, Bitcoin hasn't even done a 2x. And you're telling me that in the next 5 years, it's going to do practically a 5x from these current prices. Or not a 5x, it's going to do like an 8x. It's like 125 times 8 gets you to $1 million, I believe. All right. Yeah, Tabla Russi, you've heard it 1 million times. I've heard it 1 million times. Yeah, so it's going to do an 8x in 5 years, even though it hasn't been able to do a 2x in the last 4 years. And all these people are saying, oh, it's all over. This cycle is done. Well, if this cycle is done, can y'all please stop making that stupid prediction that it's going to be $1 million by the year 2030? Because the math just ain't math in there. If it can't do more than a 2x, or it can't even do a 2x in the last 4 years, there's no way in hell it's going to be able to do an 8x in the next 5 years. Now, here's what I think is like the truth about that prediction, is that they want to say Bitcoin is going to be $1 million. They don't know when it's going to be $1 million. And they thought the year 2030 was far enough out to where they'd be safe. And by the time 2030 rolls around, people will forget that they made that prediction. Because I think Bitcoin is just going to be like 700,000 by then. At the most. All right. So back to where I was here. Yeah, Ethereum is doing pretty good. When I'm allowed to communicate with everyone. So what I wanted to check here was the Bitcoin dominance. Oh yeah, hey, check this out right here. We're still in neutral despite hitting a new high today. We are not in greed, but the cycle is all over. Man, when the cycle is over, we've been in extreme greed for like 2 weeks. How's Bitcoin dominance? Coming down just a little bit, but not by much. Not that much to matter. It was like, let's see, it says 58.1. It was at 58.5 yesterday. So does that really matter? I don't think so. I don't think that's enough to matter here. And we had like a bunch of people tell me that when new people are coming into crypto, they apparently aren't going through Bitcoin. That like people are skipping that step. Like, no, I don't think that's how that works. I mean, just looking at the Bitcoin dominance here, This tells me, I mean, you tell me that all 58% of the crypto market cap is old money? Because what this tells me here is that that's where people are going. They're not going into the altcoins. Otherwise, Bitcoin dominance would be falling and the altcoin dominance would be going up. All right. Don't see how the internet is running so piss poor right now. Again, everybody, let me know if I go out or if you can't hear me or anything. Because right now, it's telling me, yeah, you got piss poor internet. Always when I got a lot to talk about, that's when it does it. Let's take a look at the assets that we care about the most right here. It's still extremely flat in the Richard Hart ecosystem, but we have seen tremendous performance in EHEX. Still, I mean, right now it's down from where it was earlier today. It was up 0.0033, which is incredible for EHEX because I haven't been around there for a long time. And it's also incredible with like all of the bad press, all of the constant FUD, all of the gatekeeping, all of the trash talk. For us to be there, to me, is incredible, especially when nobody, I mean nobody, is interested in crypto at all. Nobody interested in crypto at all right now. At top of the roost, I see a question. I will get to that. I will get to that. Everybody, go ahead and throw in your questions right there. I will answer them by the very end of the stream. I go back through all of them. But this is something I got to bring up on today's call with everybody on Spaces, on X Spaces, is that you guys got to realize nobody is interested in crypto right now because nobody has any money. Nobody has any money at all. When you look at the asset markets and when you look at the economy at large, it's really dominated by the very few people that have money. 50% of all consumer spending is done by the top 10% of earners. The majority of the stock market is held by the top 10% of people with top 10% of net worths. And a lot of that is boomers. A lot of people hate the boomers. The reason why is the boomers got all the money. And that's going to be the case here just because the boomers are the oldest. The oldest demographic is going to be the one that usually has all the money because they've been alive long enough to earn and save, and they've been invested long enough to have it compound. That's just the way it is. Lots of reasons to hate the boomers, but them being rich is not one of them. But the majority of everything going on in all assets and all investment markets is due to just a very small few people trading these things back and forth. Housing, for example, is so heavily concentrated just at the top. For the most part, like why home prices have stayed up so high is because it was only luxury homes that were being bought and sold and listed and taken off the market. Because only the rich could afford to buy homes, and only the rich can afford to pay cash and didn't have to worry about mortgage rates being what they were. So only the rich were swapping homes, and that was leading these extremely high luxury home prices to be in the comparables, because those high prices were in the comparables, and that was the only frame of reference that any appraiser has had. That's why housing prices are so high. It's not because of any natural organic force in the market. It's just because only the rich are trading it back and forth. Same goes for stocks. Same goes for most other things. And I say the same goes for crypto, because a lot of the participation in crypto here is not the everyday people. It's not the retail investor. It's not the person that you would expect to be in crypto. Instead, it's just the rich. It's just the people that have enough money to piss away. It's just the institutions. And so everything is really going to stay depressed until people get money again. And that's why I keep saying I think that the bull market is going to take a very long time before it really gets started. Look at this. I think this Bitcoin price here is going to come down quite a bit here from 125, 126,000. I think it's going to go back down to maybe 115,000 before it gets running again. I really think we got a difficult Q4 ahead of us. I hope I'm wrong. And you know what's great is like every time I say that, the market goes and proves me wrong. So maybe I should just keep saying it to pump everybody's bag. I hope I'm wrong, but I've not been shown anything that shows that I'm wrong. And I'm begging everybody who disagrees with me, get on a stream with me and show me how I'm wrong. But none of them want to do it. So I got to get into like all these spaces here and find all these people that are so bearish and ask them these questions. And of course, like, what I heard is not very satisfying answers in the sense of like they're telling me anything that makes me bearish. Everything they're telling me just shows, well, hey, I don't think you understand what causes bull runs, what causes the crypto market cycle to go up and what guides it and governs it anyway. All right. I was in that spaces today, man. I'm surprised. I was amazed at just how bearish so many people are. So incredibly bearish. Like, where are all you bears? I mean, I thought we got rid of you all because none of y'all wanted to come on a stream here with me. And my God, did you guys not realize, did you not learn anything from my stream with T-Bird? He and I disagree a ton, but we didn't yell and scream at each other. It wasn't a shouting match. I'll yell and scream when you're not on a stream with me, but when you're on stream with me, I'll be nice and civil to you. I'll go on mute while you talk. That's too much to ask for some of these people here. So that tells me, like, either they don't really believe all of their bearish stuff, or they're afraid of being shown on stream that they just don't know how investment markets work, and they're afraid of looking stupid. That's the best I can come up with here. And again, I highlighted this in the spaces today. I mean, look, Kronos token. We I'm high. Same with Athena. It's down 60% from its previous all-time high. And this thing is really set to benefit from the Genius Act. EtherFi down 22%. I'm sorry, help me here. I don't understand how those two things can be true at the same time. Where, I mean, this 79% that is down, it did not take a 79% hit after the supposed thing that replaced it came onto the scene. This 79% down has been a long-term trend. So if this thing is doomed just because something else came on the scene, there is no way this thing should have pumped 22% in the last 7 days. Pith Network. I hope that's the right way to say it. It might be Pyth Network. This has a lot going for it. It's down 86%. ASI has a lot going for it with the AI narrative. It's down 83%. Filecoin, for God's sakes. You know we're not in a bull market when Filecoin is down 99%. Because this has so much going for it. With the AI narrative, the demand for storage space, all of the computing space needed. When AI or when Filecoin is down this much, we're not in a bull market. Algorand has an RWA narrative behind it. Yeah, that's another thing I heard on the spaces today that I think needs to really get taken apart piece by piece for the foolishness that it is. I heard somebody tell me, what pumps coins is narrative. Okay, it's not global M2 growth that I say accounts for 90% of the price appreciation. No, none of that matters. It's narrative. Even though nobody can tell me just what the definition of narrative is, and nobody can tell me what the narrative is, or at least nobody agrees. Nobody agrees on the definition of narrative. Nobody agrees on what the narrative is. But narrative is what pumps these prices. Get out of here with that. See, what narrative is, that's something people say when they don't know the answer to the question. Why is this coin pumping? Narrative. No. And of course, a lot of people buy it. They say, "Oh, yeah, narrative," because it's just like China, all right? And if you were like this macroeconomic analyst, and you got asked a question that you didn't know the answer to, you know what you could do? Just say, China, and people will believe you because it's specific enough to seem like an answer, but vague enough to also seem like an answer. And people just kind of let it slide because they don't want to look stupid and admit that they just can't draw the lines between China and its 1 billion people population and whatever the investment thesis is. So they just let it slide. Same goes with narrative, because people don't want to admit, well, wait a minute, what's the narrative? Because apparently we're all afraid of looking stupid. They're like, you don't know what the narrative is? Well, you just haven't been paying attention now, have you? That's how dumb this whole thing is, guys. That's how dumb all of this is. People are looking for like the excuse, or they're looking for the explanation, and they make stuff up that makes no sense when the real answer has been right in front of us this whole damn time. The real answer is money printing. That is Cairo's law. And when I'm proven right, you can bet your butt that I'm going to be going on tour all across this space, telling and begging. I'm going to be going on tour all across this space, rubbing it in everybody's face. I'm going to be talking all sorts of trash and saying, hey, remember when I said Cairo's law was a thing and you told me I was wrong, and now this market just proved that I'm right? Well, now it's your turn to line up and kiss my ass. How many people in the chat want to see that happen? How many people want to see me go on tour to do that? He'll tell me, because I can't wait to do that. I can't wait to talk trash. All right. Were there any stories on CNBC that were worth talking about? I mean, there is one I know that was worth talking about. There is, besides the one that I'm very well aware of. Oh no, here we go. Internet taking a dump. All right, here we go. Still talking about the government shutdown that clearly doesn't matter. Paul Tudor Jones thinks there's going to be a massive market rally. He's talking about stocks, though. Anything else here to worry about? Really don't think so. Yeah, nothing going on here to talk about. How about the DXY? Something I say matters, but one of my arch nemesis says does not matter. And that is the strength of the dollar. Notice the dollar got pretty strong here today. It went up just a little bit. Now, it didn't go up a great big deal here, and it did come down a little bit too. But you see, this was down in like the 97s before. Now it's up in the 98s. Anybody got a theory that they'd like to share with the class as to how that happened? Because here's the thing. It's like this was before the opening today. This was earlier this morning. It was at 97.7. Then it shoots all the way up here at the open to 98.28. Does anybody have an idea as to why that happened? Because it's related to the top story for today. It's related to the top story on today's stream. Anybody want to take a guess? I'll tell you what, if anybody can successfully guess this in the chat, I will send you a free copy of the book, Decrypting Crypto. All right? I'll send you a free copy of it if you can guess why did the dollar index spike up today. And if you're watching Cindy Lou, I got your information and everything from Crypto 7's stream because you won the contest there. I got your information, and I will send it to you. Give me a little bit of time here, though, because I got to find a company that will ship it. I got to find a company that will ship it. I don't think I can use USPS or UPS either. All right. Todd LaRue says... narrative. That's right. That's why the DXY shot up here today. That's right. That's why it would here. But no, it's not narrative. There's a very good reason. It's related to the top story. We'll get into it today here. Anybody has got an idea about it in the chat, just throw your answer in there. And if you're right, I will send you a free copy of my book. Let's check the bond yields here today. I think I got to refresh this because I don't think that's current. And I was right. The bond yields went up because the 10-year Treasury was at 4.08. Now it's at 4.15. How does that happen? Now that's related to why the DXY went up. Because if your dollar bills can now earn a higher rate on a 10-year Treasury, that makes your dollar bills stronger. It's not quite a direct relationship, but it is related. So if these interest rates go up, the dollar gets stronger. They happen together. It's a correlation, not so much a causation. And then as these rates go down, the dollar gets weaker because that's less interest you can earn on your invested dollars. So still, we ain't getting a bull run until this thing gets under control. Because a 10-year Treasury above 4% shows that the bond yields are out of control and risk on appetite is not the current appetite of the investing public. What this tells you is that people in the investing public are not interested in investing in risk on assets right now. If I can earn 4.15%, 100% risk-free in a 10-year Treasury. Is it 100% risk-free? Not necessarily. It depends on what risk you're talking about and how much of it we're taking. But it is default risk-free. I'm guaranteed to get my money back. Will that money be worth what it was when I bought it? Probably not. But I'll certainly be guaranteed the interest, and I'll certainly be guaranteed my principal. So when you have interest rates this high, investments have to do much better than they're capable of doing, I think. Because the 10-year Treasury rate, or really any of these Treasury rates, they go into what we call an equity risk premium, or risk in general. And that's a big, messy thing to talk about later here. I don't want to spend all day to kind of explain the mechanics of risk premiums and everything. But just know that, like, the higher this goes, the higher risk premiums go, meaning people are demanding more from risk on assets before they invest in them. Is crypto giving people what they demand? No, because look at the far right column here. What this tells you is that crypto's not doing what people think it should be doing, which is why people are not investing in it. When you have these interest rates lower, like in the 3s and in the 2s, and I mean low 3s, because everybody's going to say, well, there's 3 right here. Oh, if the 10 years is 3%. Yes, Bullwinkle, I understand. But that's the high 3s. When it's 3% flat or 3.1%, come back to me. So, until that's the case, or it's in the 2% like Trump wants, people are just not going to be buying risk on investments. And someone's going to say, well, then why is stocks doing so well? Or is it, who's participating in the stock market right now? Are you participating in it? Are any of your friends participating in it? No. It's mostly the rich. It's mostly the institutions. It's mostly the 401ks because they have to invest in the stock market. You don't get a choice. It is not your everyday Joe. It is not what we call the retail customer, which is the everyday investor. When we were in a real bull run back in 2017, that's who I was talking to on the phone, getting them to open up accounts at Fidelity. It was normal, everyday people. That was evidence of a legitimate bull run and a legitimately good economy, because the economy was really good in 2017, and 2018, and 2019. We had a really good economy. I was talking to the regular Joe when I worked at Fidelity back in those days. But then, when we had a crap economy, when everything was getting rough and getting tough, like in 2022, I wasn't talking to the everyday Joe. I was only talking to the people with money. That's how it goes, people. Now, would you like a copy of this book for free? So far, what is causing the DXY to be down So nobody gets a free book just yet. But if you want a copy of this book for free, I will give you a copy of this book for free. All you got to do is head on over to my Substack, reinventideal.substack.com. That's reinventideal.substack.com. I just put a new post up 6 hours ago. Everything over on my Substack is 100% free. It costs you nothing to subscribe to my Substack. All you got to do is come here where it says free gift and click there, and you subscribe there, and you'll get a copy of this book for free. It's called Your Parents Were Wrong. And what this tells you is there's some things that your boomer parents might have taught you that are just plain wrong. It was true back when they were your age. But if you do exactly what they did, you will find failure where they found success. You will fail where they succeeded. Because back in their days, getting married was a good financial decision. It would benefit you tremendously to get married. Nowadays, unless you get a prenup, it's an enormous financial risk and could be a giant setback. I'll have a Substack on that about how marriage can financially cripple you these days. You people that are listening that have been divorced, you know exactly what I'm talking about. So there's some things that your parents may have taught you that were true in their day but are not true today because the times have changed. The economy is different. The tax laws are different. The investment markets are different. The jobs market is different. Education is different. People are different. So what they tell you that worked in their time is not going to work today. I tell you what it was that doesn't work no more and what does work right now. You get a free copy of this book just by signing up to my Substack. All right. That's the housekeeping. Oh, and also, this is the book I'll give away for free if somebody can guess why the DXY is up today. Let's see, anybody got it here? Oh, Kent, you're very, very close. You're very, very close, Kent. All right. I see some good questions there from you, Top of the Roost. I will answer them, I promise. See some good questions in the chat here from you. I will get to them. As I see, I don't want to answer the questions just yet here because what's going to happen is I'm going to answer your questions. I'm going to get in the middle of it, and I'm going to get sidetracked. And when I get sidetracked, I'm going to forget about all the stuff I wanted to talk about today. And then I got to do another stream later on. All right. You know what? There was another thing I needed to show you guys here. Another thing that was important. Which, to me, is big news whenever this happens. Or whenever anything with it happens here. So they finally updated the balance sheet trends here for the Federal Reserve balance sheet. So here's what I'm going to do here. I'm going to change this to say... oh, wait. Okay, there we go. Let's keep it on 2025. I'm going to change this to September, just so we got a closer look here. So check this out here. In September, we stayed pretty flat and even expanded the balance sheet by $6 billion. And it looked like, hey, QE might be back on, right? No. I wish it was. Or I wish it would just stay flat so we just have steady state maintenance going on. But now that they put in another week here, see, it's always a week behind. Now that they put in another week here, it shows that quantitative tightening continues. And it went down a total of, how much is this? About $20 billion. $20 billion in tightening on the balance sheet. So this is what I'm using to support my argument that no, the bull run has not yet begun. We can't have a bull run if quantitative tightening is going on at the largest central bank. The largest central bank of the world reserve currency is doing the tightening. I don't see how we can have any sort of bull run when this is going on. And of course, somebody on the Spaces today said, oh, well, the Federal Reserve is cutting interest rates. Doesn't that count for something? Maybe it would. But when you're cutting interest rates while continuing to do balance sheet reductions, That's just like driving a car with one foot on the gas and one foot on the brake. You're not going nowhere. So, no, the bull market hasn't started until this trend reverses and stays reversed. All right, so that was a story worth discussing for today. Now, we want to get into the big stories. The big stories here. Why is crumbling? Why does that matter to you? Why should you care about what's happening with France? Well, France is crumbling here, and it's due to capital flight. That just means a lot of people are taking their money and they're getting out of France. So France is in severe trouble. I think I lost the stream there again because the internet again decided to stop working. Don't worry, everybody that submitted a question, I'll still be able to retrieve your questions there. Don't worry about that. Yeah, everything works just fine until it decides to stop working. Let's get back to what I was sharing here. So, when the four largest economies have their central banks start to grow their balance sheets and print money, that's how they measure and track the global M2 growth. All right. So as long as those four central banks are doing it, that increases the world money supply. And then as that gets bigger, the price of financial assets and really the price of everything goes up. Like when you look at inflation is also an increase in global M2. I mean, just to get the 2% inflation target that the Federal Reserve wants, you got to have at least a 6% growth rate in global M2. All right. Everybody says last they heard was France was screwing up. Okay, but I tell you, here's what is going on here. Like France is in a lot of trouble, and the European Central Bank is gonna have to bail them out. I don't see any way around it. I do not see how they're gonna be able to save France without turning on the money printer at the ECB. The money printer at the ECB is one of four major banks that goes into the measurement of global M2. When we measure global M2, we're only measuring four banks. We're not measuring every single bank and every single dollar all across the globe. That's not possible. What we can do is we can focus on the four largest economies: Bank of Japan, Bank of China, and the ECB, European Central Bank, and the Federal Reserve Bank. So when they start printing money, that increases global M2. France is going to need to be bailed out. Why is that? What's happening? Well, France is experiencing capital outflows. And this is very recent too here, like ever since mid 2025. So it really is we have the largest exodus of capital from France, largest exodus of capital from the Eurozone since 2021. And when we say capital exiting, we just mean money. People are taking their money out of French banks and taking it out of the country. The thing that tracks this is what's called the TARGET2 payment system. That tracks cross-border money movements within the Eurozone. And France shows a sharp deficit where investors are selling their assets in France and taking the money and sticking it into assets in Germany, Luxembourg, and even some non-USD countries like Switzerland. They're going into the Swiss franc, probably even going into the British pound. And one analysis highlights that a 4.4 billion euro net outflow over the past year. But broader estimates do suspect that up to 100 billion euros has fled out of France and into the United States in just the last 2 months. So part of this, the euro taking such a giant dump, is what's pushing those US dollars up higher, what's pushing the DXY up higher. All right. So Kent, I think you was the one that said the yen trade was doing it. You're close. You're very close here. Because, like, yeah, the yen is part of it. But it's also the hey. And I pay for my internet to not work because that's what's been happening this whole damn stream. God damn it, man! Can't even get through half the stuff I want to talk about. Yeah, so I'm gonna have to just call up AT&T and be like, "Hey guys, I didn't realize that I pay you people to have a product that doesn't work." Everybody, let me know if I'm back. Let me know if I'm back here. All right? It's unbeknownst to me that I pay for internet that doesn't work. Did not know that that was a thing, that you can pay for internet that doesn't work. That's a thing nowadays. All right. So, what I was saying is that, yes, France is experiencing capital flight. And here is all the proof of it. When I was talking about this in the spaces today, apparently nobody in our community, nobody in crypto knows anything about this here because everybody was, nobody challenged me on this when I said, hey, we're going to have to bail out France. So here's how it's going here. They want to tax the rich. Typical left-wing politics here. They're saying they want to keep taxing the rich. They want a wealth tax. And, oh yeah, I got to come back to this one right here because that's something worth talking about. France's Zuckman tax. Will taxing the ultra-rich really help balance the budget? No, because the budget is incredibly generous with free goodies and giveaways here. So more stories about that. Here was another one about this here, is that the tax hikes are causing the wealthiest to flee France. They got a 44 billion euro deficit. And now they're talking about, well, let's just tax the rich. Like, you guys don't have enough rich out there in France to tax. Make sure that the stream is still working here because it keeps telling me it goes out. He causes all of this capital flight. This Gabriel Zuckman has put France at a deficit, but people are cheering him on out there. There is not a shred or sign of any slowing down of the financial and fiscal stupidity out there in France, of wrecking the economy and pissing people off and driving the capital out of France. No sign of any of that slowing down. So the deficit out there is widening. The wealthy are packing up and leaving. And here, I mean, I could find you story after story that I found today just here on this is that all of you, what you can't do is you can't guarantee that there's going to be enough taxpayers around here to pay for it. France's budget deficit is 4.7% of its GDP. This is fiscal dominance in action that Lynn Alden talks about. What this means here is that nothing's stopping this trend to close that deficit by cutting through austerity. They can't do any cutting, but if they were to do austerity, that would take 4.7% off of France's GDP, which is already pitifully low. Now, here's what really stood out to me here in this report that I was reading. This report that I was looking at, one of the most boring things in the world. Like, I tell you what, anybody who enjoys reading these things, anybody who enjoys reading this is somebody who never gets laid. Like, if you want to absolutely dry up a girl's panties and make sure that she has no intention of sleeping with you, well, when you're on a date with her, what you ought to do is just tell her, hey, I just read this 2025 investment climate statement about France and Monaco. Yeah, you want to hear me talk about that on our date here? I bet it's getting you really wet downstairs now, isn't it? So I didn't enjoy reading this here because the people who enjoy reading this don't get laid. But here's what stood out to me here about this. It was down in, where was it? Crap, I think I lost my place here in it. It was down in, was it labor policy? That wasn't labor policies. It was in the financial sector. Foreign exchange. For purposes of controlling foreign exchange, the French government considers foreigners as residents from the time they arrive in France. Does that sound like a good policy to anybody listening here? That all you got to do is just skedaddle across the border into France, and now you're considered a resident. You got all sorts of rights, including rights to welfare. France is becoming the freeloading dump of the world that the world's poor is flocking to extract resources out of the welfare state and abuse any chance they get. It's like the Munchausen capital for the world's poor, pitiful poor. This stood out to me, like almost knocked me out of my seat when I saw this right here. All right. And that's just ingrained into French law, French culture, French everything. And there's no getting around it. I mean, they even give these people that these migrants that come into it voting rights over in France. So there's no stopping it. They're not going to have austerity when the people who are dependent on mooching off of the government now have the right to keep the government funding their mooching habits. All right, economic forecasts for France. GDP growth is expected to be absolutely pitiful this year, down to 0.6. I mean, I think it's going to be even lower, probably maybe negative. This year, for it to have a 1.3% growth of GDP year over year for 2026, that is like very hopeful and practically a joke. A lot of hope baked into that number. But even if they achieved it, well, it's not really that much growth here because inflation is expected to be 1.2% out there in France. Unemployment out there is 7.9%. At least they report on their unemployment accurately, unlike us here in the United States who lie about it all the time. General government balance of GDP, this is not good. To have a negative 5.6% on that. Gross public debt is 116% of GDP, and next year it's expected to be 118%. That's as bad as the United States, and you can't do that when you're not the world reserve currency. So yes, France is in severe trouble. More stories on this. This is coming up all over the place, but I don't hear anybody talking about it. I didn't see any stories about this on CNBC or Fox Business or even on Bloomberg. Well, actually, I think I did see it on Bloomberg, but I don't see it anywhere else. Geopolitical tax reforms in Europe. France is cracking down on the ultra wealthy, and that is causing investment money to flow elsewhere out of it. How about this here? The capital flows. This chart. France recorded a capital and financial account deficit of 15 billion euros in July. And the capital flows in France are averaging a loss of 1.5 billion euros. And that's been constant. That's been constant from 1994 up till 2025. So 31 years they've been losing. How much more can they lose before the whole thing crumbles? And you take a look at this chart here. What this shows you is that it really sucks to live in France because there's just no money for nobody. There's no money in their banks. There's no money in the corporate coffers. There's no money in their investments, in their stock market, in their bond market. And this is a really big problem for them. All right, so I think I've really beaten this to death here. That, yeah, France is in trouble. What does this mean for you here? What is it? What are like the larger implications of this and everything? I mean, the outflows from France is due to political instability, fiscal policy uncertainty, lots of economic pressures, budget crisis, wealth tax proposals that are very unpopular with the rich, so there's not going to be any rich there to tax. Lots of political uncertainty, and the economy is projected to grow at a very, very slow rate. Very slow rate. And the larger implications and the likely outcome, if this continues, I've got a list of those here for you. Let me share that with you guys. Is the internet still holding up? I sure hope it is. Let's check this out here. Revenue losses and growth losses, because you got annual tax shortfalls from wealthy individuals that are skipping the country. That compounds. You see, it's not just a problem in the year that they skip the country, it's also a problem the very next year. And this slows the GDP growth. Then the banking and financial system experiences a lot of strain. The TARGET2 deficit, what that shows is the deficits of deposits. And as there is a deficit of deposits, that signals a loss in confidence in the French banking system, which prevents other people from using French banks. When you got an economy that depends and that's an invisible bank run going on. This is going to cause instability for the overall Eurozone because what France's irresponsibility can do is it can fracture the euro, especially if France decides to exit the Eurozone. It could do that. And that could trigger a global banking crisis, global banking crisis. And what's happening right now is the ECB is making austerity demands, telling the French, you got to get your budget under control. You people got to cut back on this welfare. They're going to have to institute capital controls that are not going to be popular in France, and that's going to encourage these French politicians to grandstand and be populists and say, oh, we should just leave the Eurozone, then we should leave the EU. And if they do that, well, foreign-held assets are likely to get out. They're likely to jump out because those foreign-held assets could possibly be seized by the French government in the exit from the Eurozone. There's also going to be a lot of social and political fallout, like rising inequality perceptions. That fuels the populism. And that's what's encouraging people to want to vote for all these tax hikes, because the majority of the people that are voting are not going to pay those tax hikes. And this causes instability. It causes what they call snap elections and increased loss of talent in the country as the talent moves to more stable neighbors outside of the country. I do not foresee any way that France doesn't crumble. I cannot envision a world where 12 months from now, the ECB hasn't turned on their money printer to bail out France or to protect the rest of the Eurozone from the damage that France is doing. So there's more defensive measures like that are coming aboard in France here, such as Zuckman wants to do an exit tax now. He wants to tax wealthy individuals. That's just that's another form of capital controls just on that right there. So he would require payments for years even after you relocate out of France. That's not going to be popular. All right, this could deepen a wider Eurozone crisis, could cause a deeper crisis all across the Eurozone, forcing central banks worldwide into aggressive stimulus measures. And France's situation just underscores a broader warning that in an interconnected world, one policy misstep can trigger rapid, irreversible capital shifts. All right? Now, that's the bad news of what's going on today. How about some good news? Because there is something really good going on here that I want to share with everybody. Before I do that here, though, let's pay some bills here with a little public service announcement.
Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible.
All right, and of course, internet goes out a couple of times when I'm trying to run the ad there and everything. That's all right. From what I can see here, it looks like we're back and we're staying back. Hopefully it does stay back, but can't trust what you pay for these days, apparently. So, perhaps you all have heard the stories that I've been chatting about all day long on X here, and I've been saying this is a great thing. This is great news for all of us here. And that story has got to do with this lovely young lady here. Well, I don't know if she have something on Wikipedia, right? Ain't got nothing on her yet here, but let's see. What do they say about her? She's 64 years old. Well, the Japanese do age gracefully because that looks very nice for age 64. And how long is this? Well, no, the rest of that doesn't matter here. Like the parties are much different out there in Japan. So when they say it's Japan's liberal democratic party, don't think of it as liberal Democrats here in the United States because it's not quite the same thing. Sounds like it is, but it's not. But anyways, I think this is a very that she's young at age 64. You know what? If it gets us pumping our bags, I'll take one for the team. All right, I will get on my stripper pole here for Sine and give her a very nice pole dance and a very nice lap dance afterwards if she agrees to get the Bank of Japan printing money and doing quantitative easing out there. In all seriousness, no. Like, why is this good here? Well, Takashi's victory has raised chances that the Bank of Japan will avoid lifting interest rates this month, though the pause may not last if it batters the yen. So this sounds good and bad at the same time. Is it good or is it bad? I'm going to tell you that it's good. And I did have a little bit of pushback on the spaces here today when somebody was trying to tell me that, the carry trade doesn't matter no more. What y'all got to remember is the U.S. Carry trade, where you can borrow money from Japan at very low interest rates to invest over here in the United States that has substantially better interest rates. And so much of the market depends on that carry trade existing because when they screwed with it back in August of 2024, it caused so much chaos and the stocks and everything went down tremendously. So how is this going to affect the yen? How is she going to affect the carry trade and everything? Well, I got a lot of thoughts on that matter here, and that's what I want to talk about because I'm sure what you're interested in is how will it affect crypto. So Takashi's agenda, if it gets implemented, it's likely to positively affect the yen carry trade by sustaining it. It's not going to prompt it to unwind. It's going to sustain it because you see the carry trade involves borrowing cheaply in low yield currencies like the yen, because Japan has had near zero interest rates for a very long time, and investing in higher yield assets elsewhere, such as stocks in the United States or even bonds in the United States or crypto. Now, we all agree that you should not borrow money to invest in crypto, but if you could borrow money and only pay an interest rate of less than 1%, wouldn't you do it? Because most of the cryptos out there, you expect to go a lot higher than 1%, at least a year from now. All right. So recent Bank of Japan rate hikes had begun pressuring this trade by strengthening the yen and raising borrowing costs, leading to partial unwinds back in 2024 and then also in early 2025. We had a lot of that. Now, Takashi, what she describes herself as is a fiscal dove. That's what she calls herself, a fiscal dove. And let's see, there was a story here on her philosophy and what she wants to do here with it. Is it this story? I think it might be this one. But what that means here for us, she is what of chairman to be. That means that she wants loose monetary policy, aggressive fiscal stimulus, and delay Bank of Japan rate hikes, prioritize economic growth and inflation targets. In Japan, they call that neo-Abenomics. That's their philosophy out there when they are talking about loose money policy. And her election as the Liberal Democratic Party leader that occurred yesterday, it immediately weakened the yen by over 1.5% against the dollar, which did help the dollar go up a little bit today as the yen went down. I mean, it's almost a 1.5 ratio where $1 is worth one and a half, or it's worth 150 yen. And as the markets are betting on slower or stalled normalization of that rate, we could see the yen go down faster just because you have a clearer path for quantitative easing out there in the Bank of Japan that you just don't have visitors is too early. There might be like a 25 basis point increase in the rates, but still, overall, she wants those rates to be down. She wants to have a weak yen. And there's already trading strategies built up on it. They're calling it the Takashi trade. Because when you looked at the Nikkei, the Nikkei index, that's the Japanese stock market index, that thing was up about 4.5% today. So her policies would extend the carry trade's viability, and it would maintain a wide interest rate differential between a Japanese rate and a U.S. rate, and that would also steepen Japan's yield curve, and it doesn't derail export competition. So this would also be good for U.S. markets, particularly stocks and risk-on assets like crypto, because the sustained carry trade, that channels Japanese capital into dollar-denominated investments such as stocks and crypto. Also, treasuries, we want those treasury rates to come down. Well, now we might have a lot of Japanese bringing their money here into the United States because Japanese, they actually are part of the people divesting and pulling money out of France. The money that they're pulling out needs a place to go. Come over here to the United States where you can still do the carry trade. All right. How will it affect crypto? It's going to be good for crypto markets. It acts as a tailwind for Bitcoin and all the other risk-on assets. See, a weaker yen enhances the appeal that crypto has as an inflation hedge, as an alternative to fiat, and an alternative store of value. And Bitcoin itself is worth over 10 million yen. And I think it's only going to go up higher with Takashi's victory because her loose policy preference, that is reviving liquidity for speculative trades, such as trades in crypto. Abenomics era yen weakness, that has fueled crypto rallies before in the 2010s, the early 2010s, are probably the first real bull run that Bitcoin had in 20. And it's global M2 going up that causes crypto to go up. Remember, there's 4 central banks to watch. Bank of Japan is one of them, ECB is another one, Bank of China, and then Federal Reserve. When all 4 of them are printing, global M2 growth is running on all 4 cylinders. Right now, it's only running on 1 cylinder. That's the Bank of China. That's the only one doing quantitative easing right now. Soon, the Bank of Japan will be doing quantitative easing or something close to it. They might just do something else and call it something different, but it's going to have the exact same effect as quantitative easing because she wants a weaker yen. So that's money printing in effect there. Money printing is what's going to be the end result of her policies. And that gives us Bank of Japan in addition to Bank of China. And then when France collapses and the ECB has to step in to bail them out, that gets the ECB on board. Now we're running on 3 cylinders. When we're on 3, I find it very hard to believe that the 4th one is not going to come into play. Now, you want to hear about the mechanics of this, so let's share with you the mechanics of it. I think I got a thing here. Matter of fact, let's show you this here. how does it really play out in banking terms here and everything? I mean, this shows you like what the current policy rate is over at Bank of Japan. And at the ECB, the overnight borrowing rate, I mean, that's what all this is here, is the overnight borrowing rate, 2.75. This rate here for the Fed, I don't think it's it was accurate earlier in the year. I don't think it's accurate anymore. But let's just say 4.75 just to make it tighter and say, yeah, we're very tight up here in the United States. They really don't All right, everybody, can you hear me now? Can you all see me now? Am I back? I don't think I'm back. Everybody, let me know. Am I back? Am I back? Am I working here? I think I'm working, right? So everything that I had said for like the past 20, 30 minutes, none of y'all heard, right? Let's see. How long was I out for? Good God, like a whole 20, 30 minutes? Jeez. Gonna have to repeat this stream here at some point. So let's get to everybody's questions here, though. As I saw that like a lot of questions got submitted. All right, I will try to do a stream later in the week to cover all this stuff here that I didn't get to cover today. Unbelievable how like you pay for something, you pay for internet, and it doesn't work. All right. So Top of the Roost asks, why did EHEX pump today, but PHEX dropped down into the mid point 70s? Well, you got to remember, EHEX is easier to buy. EHEX is way easier to buy. And as that gets bought up, what's causing the reaction there for it to be bought up is just more people moving into Ethereum, because Ethereum had a great day today. Let's take a look here at that. Where was the Ethereum price? Going over to CoinMarketCap. So it was at 4,700 earlier. It's not up there anymore. But see, as Ethereum has a good day, that's going to help EHEX just because of how paired it is to Ethereum and everything. Why is Pulse Chain not doing so great? I mean, really, it's a much harder asset to buy. Anybody that's really excited to bridge into our ecosystem right now, bridge into Pulse Chain with prices doing what they're doing here, and with everybody struggling as much as they are right now? Because the only thing that's really keeping Ethereum going is institutional purchases. Institutions are keeping Ethereum going. Because really, a lot of your average retail investor is not that interested in Ethereum either. Because Ethereum has had a very pitiful, pathetic, embarrassing, sad, sorry bull run. You call this a bull run in Ethereum? I don't think so. I call this one of the saddest, sorriest excuses of a performance for Ethereum that I've ever seen. So it's not so much that people are demanding EHEX over PHEX right now. It's just that EHEX is on a network that is getting a lot of demand and trading from institutions, whereas Pulse Chain is a network that is far removed from where all of the investment activity is right now. And there's nothing really inspiring people to take their investment dollars over into Pulse Chain right now. Now, this sounds bearish, so don't think I'm trying to sound bearish here. I mean to say that I'd be bearish on Pulse Chain or anything. What I'm saying is that this just proves my point that the bull run really has not even started yet, because there are so few people investing in crypto right now. And this was a debate or a disagreement that we had on the spaces today, where a lot of guys, even in the RH community here, say, oh, no. Altcoin season is happening right now, and it's alive and well. I mean, the only altcoin you can point to that has legitimately posted a new high this cycle is Binance. Do you think that what's going on in the Binance Smart Chain, in that asset, do you think what's going on in that right now is honest, truthful, and organic? I don't. I really don't believe what I see over there with Binance. Because what I see here is the number one altcoin, Ethereum, is struggling to even get back to the high that it had last cycle. I don't think that's normal. XRP, they highlighted that to me, saying, "Oh, XRP is up, so that proves that the alt season has started." No, XRP is still lower than it was in the 2017 cycle. So when altcoin numbers one and number two are still struggling to reach previous highs, we're not in an alt season. We're not in a bull run either. Let's see. Another comment here from Jim Horton. Hey, Cairo, love your videos. I would love to see gains within the next 3 months, but I understand if the printers can't get turned on until May due to the Fed. I think it might be later than May. I think it'd be June, and that's really the earliest I think it could happen. I don't know if it happens that early, though. That's the earliest I think it could happen. I do not know for a fact that it will happen by then. It could take longer, you guys. I gotta say this here. The earliest I think stuff starts going on is June 2026. That doesn't mean that's when we'll see action. That's just when I think is the earliest we could see it. It could go on longer. And like the worst case scenario is that Trump hasn't gotten a replacement for Lisa Cook in there. They haven't gotten a replacement for Jay Powell in there. And they want to, but the Democrats won the midterm and they block everybody that Trump tries to put in there. That would be the worst case scenario. In that case, we might not get pumping again till the year 2027. I hope that doesn't happen, but it could happen. Hopefully not, though, and I don't really foresee that situation playing out. I mean, I do foresee that they're going after Lisa Cook with everything they got. They're threatening her really hard with the Department of Justice to go after her. The Department of Justice has like a 99% conviction rate. So they're doing everything they can to scare her. What I think that they're probably doing is negotiating a nice academic job for her so she can still feel important after getting kicked out of the Fed. Tob LaRousse asks, what if you want to end your 10-year treasury investment earlier? Can you emergency end stake? Well, it's not staking. You see, yes, you can get out of your 10-year treasury investment early. You just sell the bond. And when you sell the bond, somebody else basically gives you your invested principal or what that bond is trading for currently. And when they give you what the bond is currently trading for, you take that, and that's the end of your investment in that bond, and they have investment in it now, and they get all future interest payments. Why would someone want 4.1% for 10 years if the economy changes so frequently? You gotta remember, like, not everybody who invests like we do. Some people who invest are insurance companies that aren't allowed to invest in things that we do. They can only invest in things like bonds, and they want safe investments because they're going to have claims that they'll have to pay. Annuity companies are another one. They have income distributions that they're going to have to pay out, so they want something that they can take to an actuary to have a consistent income stream so they can pay on the annuity claims. Also, pensions. Pensions, they work with treasury bonds over the long term as well. They work with actuaries on that to say, well, yeah, we need like a X percent return over the next couple of years to make sure that we make good on our pension payouts. That's what it is. Jim Horton says, your knowledge and insight is very refreshing. Thank you very much. Anyone that thinks the talk of the cycle was today is frankly an idiot. 100% is all about the M2 money supply. I agree that it's all about the M2 money supply. There is a chance that it's all over today. If we go down hard tomorrow and then we keep going down, it could be all over. I don't think that that's going to be the case. But until tomorrow rolls around, until we have tomorrow, I really can't say anything about whether it's all over now or whether the whole 4-year cycle thing is dead. Because technically, we did hit a new all-time high today. We hit $126,069. Is that the high of this cycle? No, it just all depends on what Bitcoin does for the next several days and the next few months. But I do think that any real bull run that we're going to have, it doesn't get started until June 2026 at the very earliest. Tablarus asks, your QE prediction is June, but that is largely Fed US based. When do you think the ECB will bail out France? I don't think France can last longer than a year. I don't think France can last longer than a year. They're going to have to bail out France within a year. They're going to have to bail them out within the next year. I can't really say for sure on that one. Can't say for sure on that one yet. Oh, hey, Bitcoin is going up and Ethereum is going up here. Check this out. Bitcoin is up to 125,000. Ethereum is up to 4,700. Does this continue? I hope it continues if it keeps popping and goes all the way into tomorrow, just so I can say, yeah, the 4-year cycle as we know it is dead. It doesn't mean that we keep going up for the next year. It just means that you're going to have to modify the whole cycle theory, because what it was based off of is 1,064 days from the bottom is when you hit the top. So we are potentially going to be heading into uncharted waters. What I think needs to happen for us to have an unbelievable bull run is that global M2 has to be firing on all 4 cylinders. I probably said this a gazillion times, and you guys are probably sick of hearing me saying it, but I got to make sure that I say it because the stream keeps going in and out, so I got to make sure that y'all hear this, is that global M2 is going to be supported by the Federal Reserve doing QE, the ECB doing QE, the Bank of Japan doing QE, and the Bank of China doing QE. Right now, we're running on 1 cylinder. Only China is doing it. The Bank of Japan is next. I think they're next here because that's what Takeshi wants. Takeshi, I love you, honey. If you turn on the Japanese money printer, I'll give you a lap dance. I'll give you a pole dance. You know what I'm going to do? Takeshi, if you turn on the money printer, I'm going to do this here for you. All right, so Takeshi, you do that for us here. I do that for you. All right. Japan, I think, is next. Bank of Japan. And then I think the European Central Bank is next after that, just because I do not foresee France standing much longer. And I think they're going to have to at least do the TPI to save France. TPI is a special tool that they have for situations like what France is going on. I don't know if y'all were able to see when I had that on the screen, so I'll put it back on the screen here again. There is a special tool that the European Central Bank has specifically for situations like what France is going through, and that's called the Transmission Protection Instrument. That allows them to do what we call quantitative easing here in the United States. Not quite the same thing. It's a little different. It just allows them to buy bonds. When they have quantitative easing out there in Europe, well, that's when they're allowed to do all sorts of stuff. They're allowed to buy bonds. They're allowed to buy stocks. They can buy basically any other asset that they want out there. So TPI, it's very likely that that gets turned on. You just need the spread between France's bonds and other bonds like Germany's to hit 100 basis points. It's very likely to do that. ECB has to step in. To save them there. All right, and then what else you see on here is the 2 other tools that they have, like quantitative easing and rate cuts. More rate cuts are coming from the ECB. That's certainly going to happen. But the power that those rate cuts have is really dwarfed in comparison to any type of quantitative easing or any type of TPI that they do. It's like not even close there. Let's see. It was another thing here that I think we could have. It was a couple of other things to show you. Here's another thing. Here's like when it comes to Bitcoin, and is this bull market over? Is the Bitcoin run even over? If you price it in gold, Bitcoin is actually still down. It's in a bear market if you price it in gold. Right now, it's got a market cap of 2.5 trillion. That's 23 trillion less than gold. So gold is currently 10 times larger than Bitcoin. So even if Bitcoin hit $1 million and gold was unchanged, gold would still only be 75% the size of gold. Bitcoin will only be 75% the size of gold. So we're still early, still very early on it. And if you price it in gold, Bitcoin is still down. The S&P 500 that is supposedly in a bubble is down 23% this year. So I don't think that the real bull run has even begun, because I should not have statistics that I could quote like that in a real bull run. What else we could say here about it is that the money that's being invested in crypto right now is still pretty small, because the AI deals are really taking a lot of the venture capital money. That's what this dark blue line shows, whereas crypto is this second to bottom line right here. So even in the big institutional and rich person money where we get attention right now, really the only money we're getting right now, we're really not getting that much of it. So I still say, yeah, we're not done yet. And when we look at, this was just the overnight reaction to Takeshi getting elected to the Liberal Democrat Party out there in Japan. It had an amazing effect just here on the Nikkei 225. This was just one day where it pops up this hard, 5%. 5% pop in the Japanese stock market is not normal. That is an incredible return for it to get. And this is just based on the hype of what Takeshi is going to do. We've got nothing but lots of hope for this young lady here. This young lady, Takeshi. I think we're going to be very glad that she's stepping in to office where she's stepping in right now. Now, again, Japan is a very small country, so it can't have a absolutely dramatic effect. It can't carry the entire global M2. So don't get too excited about it. They can't push global M2 up as high as we want them to. Don't think that will happen. But I do think that this is going to be helping the global M2 growth start to run on all four cylinders, because Japan is still a great big chunk of the overall world economy. Oh yeah, by the way, this story here that nobody was talking about. France's prime minister resigned today, less than a month after being appointed. This tells you what a disaster France is. When you appointed a prime minister a month ago, and then 1 month later, they're resigning because they're like, oh my God, this place is a hellhole with so many problems. There's no way I could possibly solve them. That does not look good. I mean, it would be like, this photo would be the equivalent here to it is, be like if Trump appointed Scott Bessent just a month ago, and then today Scott Bessent came out and said, oh my gosh, the finances of this country are just such crap. I can't possibly be the Treasury Secretary here of this country. I'm resigning. That would be very embarrassing for the United States. That would signal a huge disaster for the United States. And that would cause a lot of people to lose confidence here in the United States and withdraw investment from it, and cause a deeper spiral into economic death here in the United States. That's what's going on out there in France. So I give him 12 months before the ECB has to step in. Could be sooner, but the longest I give it is 12 months. I don't see them lasting beyond a year from now. All right. So hopefully, despite all of the interruptions that we had on the stream here of the weather constantly rugging it and everything, hopefully you were able to get the majority of the information. I'll probably have to do another stream later this week to ensure everybody got everything I meant to share with you here today. And till next time, this is Reinvent Ideal. I'm Cairo Copeland. And don't forget the book, Decrypting Crypto, if you want to understand what it is that causes these bull runs and all of these market cycles that we experience here in crypto, because your friends are going to ask you, hey, that crypto thing you do, what is it that actually causes it to go up? I'd like to invest in it, but I just don't understand what causes it to go up. Can you explain it to me? And people have a hard time explaining it. I was in a spaces earlier today, and a lot of those people that were in the spaces, they were actually very prominent and educated members of our community. They don't know why the crypto market goes up, or they had the wrong ideas why the crypto market goes up. But if you read my book, you will see exactly why it goes up, and you'll be able to articulate and explain it to a teenager, and they will understand it. So get your hands on it. I promise you won't regret it. Cairo out.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at Reinvent Ideal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland,